Hello dear traders, my name is Sophie Johnson. I'm Senior Manager at NSBroker, and today I'm going to show you the trading with the indices and the benefit of it. So first of all, I would like to explain you what are indices. So indices are calculations of the price performance of the group of shares from the exchange. Indices are highly liquid market to trade, and with more trading hours than most other markets, you can receive longer exposure to potential opportunities. Of course, indices price movements and volatility are impacted by factors like political effects, major factors which affect companies in the particular sector, as well employment figures and big changes in the currency market. So on our trading platform, MetaTrader 5, we have the list of such indices as SPX 500, USA 100, JERS 30, VS 30, Australian, France index, as well as Japanese and UK. So first of all, I would like to explain you about the S&P 500. This is the index, right, which includes such companies like Bank of America, Salesforce, Coca-Cola, Walmart, Citigroup. Then next one, this is the US 100. Most common name is NASDAQ. So it includes such companies like Amazon, Facebook, Tesla, Netflix, eBay, and so on. Then Germany 30, common name is DAX, right? So it includes Germany companies like BMW, Bayer, Volkswagen, and Deutsche Bank, and other biggest companies of this company. As well, Wall Street Index, usually the name is the Dow Jones, right? Which includes such companies like Salesforce, Procter & Gamble, IBM, Boeing, Walt Disney, Microsoft, and the most common is Apple. Then we have the UK 100. This is the index of share index of companies on the London Stock Exchange, and includes such companies as Barclays, Burberry, British American Tobacco, and so on. As well, we have here at the list Australia index, France index, and Japanese, right? So those indices are including companies which are inside of this country. And the reason they are popular, right, because many of these indices include blue chip stocks. So blue chip can be defined different ways, but generally it is the well-established companies with the market cap in the billions, considered a market leader. So for example, the blue chip stock are General Electronic, General Motors, Bank of America, Apple, Johnson & Johnson, and Microsoft. So as before, we were trading with you on such indicators as Bollinger Band and the stochastic, right? As well, today I will be trading on them as well. I will be analyzing the assets with such indicators, and of course, right, if someone use some else, so it is as well the potential way to trade profitably with another indicators. So let us analyze such indices like USA S&P 500. Here we have the movement to top, right? The indicator showing us that it is going up. As well, here it will reach the point. Let us buy, right? Then USA, the NASDAQ. We can see, right, that the price was fall down. It is in the middle point right now. Let's analyze with different time frames. We can open this index on the short term, on buy way. As well Germany, right? We can see here the perfect example of the indicators, right? The Bollinger Band showing us the movement which is going to downside as here, right? As well stochastic showing us the same, that the price already crossed the deepest point, so nearest time it will be increasing, so this is the excellent time to place this position on buy. So as well, the most common question from the traders I am getting that how to identify what moves an indices price. So an indices price can be affected by the range of factors, including like economic news, company financial results, company announcements, stocks prices as well. So the economic news affected such as central bank announcements, payroll reports, or other economic events. Then company financial results, right? So individual company profits and losses will cause share prices to increase or decrease, so it can affect an indices price. Then company announcements as well, changes to company leadership will affect share price, which can have either a positive or negative effect on indices price. And as well, so when indices, right, going up, that's mean that all shares inside of it, so all companies are going up as well, right? So for you, with simple words to understand, when companies which are including inside of the index are going up, they are increasing, so the same index will be going up. When the companies are in the bad situation, right, with the bad economic, so they are falling down as well, indices will be falling. So for example, the index of the US 100, right, the NSB, we can analyze the movement of it and compare it with the company which included, so Amazon, right? So here we have the fall of the price, right, middle point, and here was the big increasing, right, of the price. So USA, the same situation, right, was falling down. That's why the stocks were as well in the middle point to the deepest one. As well, for example, Dow Jones, right, the Wall Street index. And we can compare it with the Boeing company, right? So here was the increasing of the price, right? And here as well we can see with the stochastic oscillator that here was the same movement to the top. So let us see what else we can open, right, with indices. So here we can see the perfect time to open the Germany 30, the DAX 30 on buy way, because already price crossed the bottom line of the Bollinger and stochastic showing us the same. So we can buy as before, right, we made with you. What about UK? The same situation, right? We can see that the price will be going up as here, right, was big movement, then followed the price, so it will definitely reach the point of the 7,095. So we can buy this position. So how to find the perfect volume for yourself, right, to trade with the indices? First of all, I need to notice you that the indices are very expensive, right? So you need to be clear with your capital, right? Because when you're opening the indices, the big margin level is decreasing due to the opening of the price, right? Because first of all, you need to know that to calculate the volume, you need to price of the index, right, multiply by leverage. It is 1 to 20, so we are multiplying by 20, and then divide by volume. Volume you may find in the specification, here you will have contract size, so 10. So one lot, this is the 10 contracts, right? So when you are buying or when you are selling one lot, so you need to price multiply by leverage of the 20 and then divide to 10. That will be your amount to invest in such index, like UK 100, right, for example. So as well, as I mentioned before, right, indices price movements and volatility are impacted by factors like political events, major factors which affect companies, economic data, and so on. And when the market is liquidity, right, when we have the big liquidity inside of the market, there you can find the perfect ways for yourself to generate the excellent profitable results. So even we can take the time after opening the American market when the volatility is the biggest one. That moment will be the excellent one for you to trade there, because even on the shorter term, right, with even 5-10 minutes term, right, you are able to get the excellent results in the profit. So right now we see that all our trades are in the process, right? They are working on the market. We need to wait till the price will reach that moment that we place with you. As well, you may add the take profit, right? Here we can click double tap on the take profit and put the take profit with the points or with the exactly price. I would like to close the position after it will reach the profit, right, on the short term without risking. We can see what else is going with other indices. The France index right now, it is in the good situation, right? We can see that it is going up. We can buy it. As well, right now, the Australian is already crossed the Bollinger, the stochastic here, right? But it is in the middle point. Here you have the signals, right? The points of the opening such trades as I made already. The France in the profit, right? So as I told you, the indices are very volatile, right? You may open the position and it will be providing you the profit exactly moment of the opening, right? You can wait a bit more to reach bigger profit and close the position manually, or put the take profit to close the position automatically, right? To not monitoring the situation all the time, as I mentioned you before. And you can use this strategy as well, because someone not using take profit and stop losses, someone uses. So everything depends on the person and the strategy which using. So as I mentioned before, right, be clear with the price of the opening such trades on indices, right, because they are very expensive. You need to make your money management, right, to be safety with the margin call, right. You need to take a look on your margin level when you are opening the indices. And of course, they are providing the excellent profitable results because they are very volatile, right? As I told you, even in the shorter term, you are able to get such profits that you are getting in a week or some days time. So wish you to have the wonderful day, and as well to invest the capital inside of the indices and test drive the strategy, because you will be able to read there the excellent results.